Hey, gentlemen and ladies, BTC USD. Yes, it's the game, and we're going to have a check-in with you on this fella. Couple of things. There's a different framing for looking at this. We know that our potential inverted scenario didn't play out. Well, it was invalidated. It began and then was invalidated. So we'll leave those red lines that were interesting and the green lines. But there's a couple of slightly different scenario for you to consider. And it's one that still holds as a potential valid structure of price behavior that we could be observing here on BTC USD. So let's get straight to it. I'm going to make this in red so it sticks out slightly better. Fatten her up a bit, and I'm probably going to look to draw. This is how I typically draw my wedges, actually, with quite a lot of touches ideally, and I don't require that the original high is at the apex, or not the apex, but the high point of the extended line. So there clearly was a gradient here that existed for a bit and then was run. You might draw it potentially like this and take a touch there and take a touch there and slope it back a little bit like that. That also too is a potentially valid draw for the falling wedge aspect. I've probably extended it a little bit further than I need. Those highs were here. Probably know that I like to split any wedge in half, get my ground floor and my first level in, just to see to what level of interaction we've had with those points. So I tend to draw one like this. That's kind of the aggregated line of descent that you've had from those highs to eventually the breakout of the wedge. I make a bit thinner slightly, and that often starts with in and around the high point part, and then you visit the sides there. So this could be, in essence, part of a grinding out a low. It could be. It's not to say it is. It could be we're modeling price behavior as potential. You got your rising wedge there, your little dip back in, then you broke out of the wedge and had a full break, and this is all part of a return move to approximately the same levels of break. And I'm going to do some scribbling now soon as well, so stand by for that. In fact, I will get my draw platform up ready for you for exactly that. But while we're going on, while that's getting booting up, so this could be the break and then the return move up to roughly the same level from whence it broke, which admittedly is not particularly bullish, but since then we've had a bit of basing out price behavior on the slightly bigger time. So we're still on the daily here. Let's just zoom it in. You know all about the big blow off bull, and you can see a little bit of low volatility and then hammering here, which is quite interesting, and then a shooting star. So first it based out, then it tried to get away, couldn't, and now it's building a little bit. Now this isn't uber bullish, but the point is it's low vol and it's calming out, and there's an element of a hammer there. It's also at a zone that has been once, twice, 3, 4, 5 and 6 times repelled. In my own world view, I suspect that with the futures, let's coin market cap, let's get that fella up, that there is a role being played here by maintaining BTC in and around 100 billion. You can see it's 110 now. When it was down at the lows, it was 103.3. Now that it's rallied somewhat, it's back up at 110. So at all these levels, it's teetering in and around the 100 billion mark. For BTC. So as I've said before, it could be one or two potential realities. It bases out and holds these levels and we get a rounded bottom. Let's see if that chart is ready for us. I'm just going to do a copy of the link and we'll do a little update of that chart, and I'm going to post it up top here in the Edge browser. So why am I bothering with Edge, you might be wondering. Yeah, there's a good reason. We want to actually do a little bit of a draw for you, and I've got hold of the surface, and that's part of the game, to get you a little bit of a better view in essence. I've done it before. I eliminated that. Sorry, I'm talking to myself here. Let's get rid of that. We want to get a bit more space, and now that should be better. Let's draw here. So what am I actually saying? visually it's just so much more fun and also easier for you to spot. So here's where we're at. Point I've made before is there's kind of a green zone in and around here that runs along that neckline, which was your inverted head and shoulders, which did perform quite nicely, giving it a bit of a thicken up, which captures this zone. And I would say for me this is teetering on the 100 billion market cap zone. And what we've actually had is we've had a dip and a very violent rejection, a rounded dip and a moderately strong rejection, the deepest dip of the lot, which turned into an inverted head and shoulders rejection that produced a target, and then a fizzle back down. And now we're in a low vol rounded bottom in my view again. Now there's a couple of things that could happen. My take is you've got to bear in mind you're being squeezed across the tops here, there, and this here. So I'm going to take away that line there. This here are decreasing lows. So there's been compression along the top here for your price aim. So there's a lot of selling getting dissipated. But there has been a kind of level held, but it hasn't been 100% the angled upwind one that we originally may have had with our inverted jaw like that. That's a terrible line. Let me take him off. Wasn't well drawn at all. I've got it still on the base because I want to use a better quality mic. And if you disconnect the surface pad bit, so it was kind of like that. At that point, there was a risk of downside continuation, and then we got the break. What we've subsequently had is we've run lower here, where our inverted head and shoulders of all the lows, and that was a spike low for a very short period that was violently rejected. But it's been lower here. So you've now got a case of marginally lower lows, as I call it. And that whole process begets a certain amount of bottoming out. So you've gone one lower volatility entirely, particularly now at this basing out period. These are small candles, so let's just take that. I took the lead lines out and a bit of the green too. Very small bodied candles, minor wicks. Compare it to the violence of the selling period and the reverse pumping period. This is swinging around like a drunk with a baseball bat in a pub, a little bit leery, let's just say. And even at these punctures points right after the second impulse, still chopping and swinging about, quite a big pump there. But this is calming, so there is an essence of volatility is reducing. Good sign long run for base building. And in this micro point here, this volatility here, as I've already hinted, is reducing, which might point to a certain rally. However, when you get the volatility squeeze, it doesn't mean it can't be bearish. There is still scope as one option, although I'd say for me slightly the lesser likely option of a weak rally here up to here, and then a rollover that might eventually break with huge momentum, a long red candle, this green area. So that's our worry, where that would be a big bear candle, because that would take you through what has been a kind of defensive zone from the 5/7s to about the 6/3s. So these values all pertain to the lines, guys, so don't be confused there. 5/7s to the 6/3s, this whole area that I've done in green. So there is a flattening out and a basing out going on, which broadly I would suspect would put this as a minority view, this minor pop, and then eventually a move out of the wedge. My stronger probability suspicion is that we get a little bit more base building, and we get an assertive move away from this base, and that would ideally require a higher high. So let's change color a little bit because that red's getting a bit intense. We would like a higher high than this point. So Dow theory, essentially when you start making higher highs and you stop making lower lows. So a break of that level is already technically a good thing, and then a pullback rest, but that doesn't revisit these lows, but some point higher up, sets up a zig and a zag and makes scope for more of that. It doesn't have to continue. It can chill for a bit and base out again. I'm not expecting it to just go into wild bull. As I've said many times before, we aren't binary. It isn't one or the other. There is a churn period. There's a lot of burnt hands. There's emotionally wrecked people, financially wrecked people, strung out people, people that said never again. You need new blood, you need new events. The ETF thing could kick a bit of optimism out after that ETF rally, essentially, and then dump on the news. But it could be anything. In generally, the technical results are as a result of fundamental narrative, which is perceived bullish or not, but you are looking at the same coin. You're just looking at a different side of it. And we don't know the news. It will always be the last to know the news generally. So we have a mechanism for assessing it before it happens. So let's just clean the face a bit here because we've done a fair bit of drawing. What has proven productive hunting grounds though during this period, and I will point to this, is in fact the alts, like being short Ethereum up until yesterday, and it started to show some signs of recovery there. And I need to get my Chrome back, my recorder's in the way. Also it's giving me a new browser. Time for the mouse. Some things can't be beaten by the mouse. So NIO has been a great short as well. So I gave that at the last webinar, guys. Be biased to the short side. It's going to underperform for a period. That's also looked up along with Ethereum. So if we go to our playlist and we looked at the crypto playlist, we have a look at what we got in there. So if I go ETH, USD, you can see how we had a great sell-off that has actually run lows. I highlighted in our sniper circle premium area how we would run a support level on Bitcoin. That was key. That was a big squeeze that we got, and it's just been consistently lower, and it's taken out that low. It did it with momentum, so that's been a great trade. It has hammered a little bit here. Guys, I've also got to remember the dollar's having its first rest of an immensely strong spell, and it is, in our view, on the FX side going to reassert. We have this unique view that we don't only look in crypto in isolation. We look at it as a global hedge fund manager about all places where money can be kept, which includes currencies. Dollar has been very strong, which has been helping the lean down on all of these bleeding out to the downside. So even if cryptos are in different market, if the dollar is being really strong, its valuation is slipping. But it's slipped. Coins have slipped at different rates, and so this has been a very productive shorting period. This gap here from us, it's just been consistently largely down. One small green candle in between 4 or 5 reds. Then we look at NIO, which I shared as our short, and that was the structure, the pattern that we gave you, and we said, can it go from 34 down all the way to 16, I think it was, on Binance, and 11 on Bitfinex. It's made the Binance target, and it's just having a small pause. I could still see it potentially spilling all the way there. So if I take that over, I can do a little bit of scribbling. In fact, let's drop the time frame here. That's daily. We can do the pattern view on the 4 hourly. So NIO's been a great one, and that little structure that you're seeing there, if we just grab him and save him, and we pull the target into sight, how much further it's got to go. People thought 33.77. Are you seriously saying it's going to go to 11? That was a 66% market cap shave. A lot of doubters, well, that's a big call type thought. It's not such a out there call now in terms of where we're at today. And the guys that attended that webinar got something for nothing there on both the ETH and the Ethereum side. And I mean, even if they chose to call time at the Binance's target, they would have done great. So for me, I've gone and left that sidebar in again. But for me, that is rising wedge and there's scope for that to happen out of that, and you could even run new lows and still make that target. We lost a little bit of our form on that. Let's just see if we can go. Let's save, and then we can leave that structure. See if I can get it back. So it's at 16 at the moment, and 15 to get down to 11 and a bit. You've got another $4 or $5 to shed on the Neo short. Let's just close that so I can get this frame better for you. Sorry, it carried across not so well. That's the viewpoint you probably wanted and needed. I'll save that again and try one more time. And we've actually got one of our insiders doing a proper course on how to use TradingView, all the best aspects of which I'm probably the worst student of how not to do it, and I want to be better because I want to be more effective in the teaching that I'm doing for guys, and that's we're going to be releasing that when it's done for our guys in the premium area, and he's brilliant at it, Brett. So let's pull it up one more time and let's do Neo. So the whole idea is that there's a bit of a falling wedge in situ. Oh, please don't put that damn that taskbar in the side. It ruins the scaling. There we go. So we got it back and we can go into draw mode now. So this for me is this swallow does not a summer make just yet. I think there's scope for this baby still to finish its job. That's not to say it has to. I mean, it could go one way up, but there's a scope for it to run there, which would imply there's a little bit more downside in Neo, and that probably means there isn't unbridled optimism and bullishness across the board in crypto land. I'm going to also point out I never dropped down the time frames on this baby. I'm not sure this browser will allow. We're already in drawing mode, so it won't. But if I just go here, let's see, no, yes, save your changes. Okay, save them. If we drop the time frame and drop into this period, I want to show you a little bit about what I see is coming next here. It's going to potentially build a base, but not in any great hurry, and it's not going to be wildly bullish, is my perception. So let's just do this here. Here's a key thing I want to show you, and then we're going to call it a day because I've been a bit of a rambler today. Sorry for this. The browsers have been distracting me with all of this, trying to do the drawing and get all the best bits. No more excuses. So if we just get that and we put it on gray, what we've had is a series of marginally lower lows here. So there we have them. I'll change the color. You've got a low, and then a low there, and then we've got a succession of lower highs for a while. So let me just draw this correctly. This is how it was going, and I did this vid for my premium guys to say that we're going to start basing out and we're going to get our first higher high there, and there. And actually almost straight away, I did it while this was selling off, almost straight away it based quite early and had a blow off moment that took you out of that range. So this was a slightly broadening structure. It was a broadening structure, this one, and it was angled down. So it was bleeding out the sellers and getting finished. A little bit of a megaphone, not chronically so, but it was slightly broader. So these highs were only getting marginally lower and these lows marginally lower. So what's actually happened now is we got a breakout and we got our first higher high. This is higher. It only has to be marginally so to qualify, but it is. So taking that, wiping the face, now what we've got is a little bit of grinding up behavior. I think we're going to have another stab down. So if you're wanting my take for what comes next, this is what it'll be. We've got a little bit of a grind there, and I think at some point we get a and it makes a low, but it doesn't challenge that low. It's a higher low. So you will have then had higher high, higher low, and then you start moving up again, and that would be the end. This is contributing, and let's do this in again another color and maybe just make the line nice and fat. This is contributing to what I call these half pipe rounding bottoms. Like that. So this in effect is marginally price behavior relief. So this is probably creating the structure of rounding bottom for me, with a bit of zig and a bit of zag in it, and that's quite clear. So here you had real capitulation, and you got your zig and your zag within that. It's kind of that pumpkin smile that I've drawn, and you revisit the top. So I think it could be some optimism, but before that, a little bit of down leg. Now, with reference to the Neo, that Neo can spill home during this down leg. So those that want to get in, I wouldn't chase in here on this grind and that squeeze across the top. Look, it could still pop out to the top and visit higher first, but I still think you're going to have another down leg. It is giving you these teeth moments, so don't panic buy at the top. In terms of your performance, entries matter. Let me just write that down. If you take one thing from all of this, entries matter almost as much as money management and sizing. Entries matter. Try get the best one. Be patient. This is not a runaway market. Okay, with that, this long ramble must end. Okay, speak to you all soon and hope you enjoyed it.